Welcome to Illuminati Silver. We tell you the truth about silver. Today is Monday the 18th of April 2016 and we're asking the question, is Deutsche Bank a criminal bank rotten to the core? Banks worldwide provide jobs for many millions of people and generally perform well in money transmission services. Like all industries and companies, they have good personnel and people who commit acts of wrongdoing. This is the nature of life, business and human beings. However, when an entity such as Deutsche Bank is fined over the past 20 years for numerous misdemeanours and acts of criminality, one has to ask whether such an entity is a criminal one and rotten to the core. Deutsche Bank's statute was adopted on the 22nd of January 1870. And on the 10th of March 1870, the Prussian government granted it a banking license. The statute laid great stress on foreign business. Quote, "The object of the company was to transact banking business of all kinds, in particular to promote and facilitate trade relations between Germany, other European countries and overseas markets. The direct aim was to challenge the hegemony of British banks, which continued to dominate the financing of German foreign trade. From the outset, international business was built up steadily. Between 1871 and 1873, Deutsche Bank opened 5 branches in Bremen, Yokohama, Shanghai, Hamburg, and London." Unquote. Its 2015 annual report shows that the group has total assets of 1,629 billion euros, total net revenues of 33.5 billion euros, has 2,790 branches and 101,104 full-time employees. So indeed, it's a Goliath organisation and obviously transacts millions of operations each year. Notwithstanding this, it's somewhat bewildering, if not frightening, to see the number of illegal activities which either the organisation or people within that organisation have carried out over the past 20 years. Here are just a few of those that have actually been discovered. In 1995, unearthed documents from East Germany provided new documentation of the ways in which Deutsche Bank helped the Nazis expropriate Jewish businesses. The bank later expressed regret when an historian's report indicated that it had engaged in gold transactions with the Nazi regime. In June 1998, its offices were raided by German criminal investigators looking for evidence that the bank helped wealthy customers engage in tax evasion. In 2002, 3 US agencies, the SEC, the New York Stock Exchange, and NASD, the US industry regulator now known as FINRA, fined Deutsche Bank Securities $1.65 million for failing to adhere to requirements relating to the preservation of email archives so they could be consulted in enforcement actions. In 2003, the SEC penalised Deutsche Bank $750,000 for violating conflict of interest rules by failing to disclose its role in advising Hewlett-Packard on the acquisition of Compaq computers, at the same time that its asset management arm was voting its clients' proxies in favour of the deal. In 2004, the NASD fined Deutsche Bank $5.2 million for taking excessive commissions in the allocation of shares of initial public offerings, and later that year fined the bank $5 million for corporate high-yield bond trading violations. Also in 2004, the SEC announced that Deutsche Bank would pay $87.5 million to settle charges of conflicts of interest between its investment banking and its research operations. In 2006, the Financial Services Authority fined Deutsche Bank £6.3 million for failing to observe proper standards of market conduct in transactions involving shares of Scania and Cytos biotechnology. That same year, Deutsche Bank agreed to pay $208 million to US federal and state agencies to settle charges of market timing violations. During this period, Deutsche Bank chief executive Jose Ackermann personally paid €3.2 million to settle criminal charges that he and other directors of the German telecommunications company Mannesmann awarded excessive bonuses to Mannesmann executives. In 2007, Deutsche Bank agreed to pay $25 million and give up $416 million in unsecured claims to settle litigation relating to its dealings with bankrupt energy trader Enron Corporation. In 2009, the SEC announced that Deutsche Bank would provide $1.3 billion in liquidity to investors that the agency had alleged were misled by the bank about the risks associated with auction-rate securities. In 2010, FINRA fined Deutsche Bank Securities $575,000 for violating rules relating to short sales, and then $7.5 million for negligently misrepresenting delinquency data in connection with the subprime mortgage securities. Also in 2010, the US Attorney for the Southern District of New York announced that Deutsche Bank would pay $553.6 million and admit to criminal wrongdoing to resolve charges that it participated in transactions that promoted fraudulent tax shelters and generated billions of dollars in US tax losses. In 2011, the Financial Services Authority fined Deutsche Bank's DB Mortgages unit £840,000 for irresponsible lending practices and unfair treatment of customers in arrears. The agency also secured redress of approximately £1.5 million for DB Mortgages customers. Also in 2011, the Federal Housing Finance Agency sued Deutsche Bank and other firms for abuses in the sale of mortgage-backed securities to Fannie Mae and Freddie Mac. The case was settled for $1.9 billion in late 2013. In 2012, US Attorney for the Southern District of New York announced that Deutsche Bank would pay $202.3 million to settle charges that its mortgage IT unit had repeatedly made false certifications to the US Federal Housing Administration about the quality of mortgages to qualify them for FHA insurance coverage. In January 2013, Deutsche Bank agreed to pay $1.5 million fine to the US Federal Energy Regulatory Commission to settle charges that it had manipulated energy markets in California in 2010. In 2013, Massachusetts fined Deutsche Bank $17.5 million for failing to inform investors of conflicts of interest during the sale of collateralized debt obligations. In December 2013, Deutsche Bank was fined $983 million by the European Commission for LIBOR manipulation. Later, in April 2015, it had to agree to pay $2.5 billion to settle LIBOR allegations brought by US and UK regulators. In February 2014, Deutsche Bank agreed to pay the equivalent of about $1 billion to settle a long-standing lawsuit in which the bank had been accused of contributing to the collapse of the Kirch Media Group in Germany. In July 2014, the US Senate Permanent Subcommittee on Investigations accused Deutsche Bank and Barclays of helping hedge funds use dubious financial products to avoid paying more than $6 billion in taxes. In December 2014, FINRA fined Deutsche Bank Securities $4 million as part of a case against 10 investment banks for allowing their stock analysts to solicit business and offer favourable research coverage in connection with a planned initial offering of Toys R Us in 2010. In May 2015, the SEC announced that Deutsche Bank would pay $55 million to settle allegations that it overstated the value of its derivatives portfolio during the height of the financial meltdown. On the 4th of November 2015, it was announced that Deutsche Bank would pay $258 million in fines for doing business with US-sanctioned countries like Iran, Libya and Syria. US authorities claimed that from at least 1999 through to 2006, Deutsche Bank disguised 27,200 dollar clearing transactions valued at more than $10.86 billion to skirt US sanctions. In April 2015, Deutsche Bank was issued with the largest fine of any bank for rigging international bank offer rates. Its fine was specifically for the manipulation of LIBOR and Euribor. The record penalty given to Deutsche Bank was a combination of regulatory fines, civil and criminal penalties. $775 million criminal penalty from the US Department of Justice, $800 million civil penalty from the US Commodity Futures Trading Commission, $600 million regulatory fine from New York State's Department of Financial Services, and $344 million regulatory fine from the UK's Financial Conduct Authority. As if these were not enough, only last week, Deutsche Bank AG had reached settlements in lawsuits over allegations that it manipulated gold and silver prices. Silver and gold futures traders sued groups of banks in 2014, alleging they rigged prices for the precious metals and their derivatives. Silver traders brought claims against Deutsche Bank, HSBC Holdings, Bank of Nova Scotia and UBS AG. Gold traders additionally sued Barclays plc and Societe Generale. The traders alleged the banks abused their positions of controlling daily silver and gold fixes to reap illegitimate profits from trading and hurting other investors in those markets who use the benchmark in billions of dollars of transactions, according to versions of the complaints filed in 2015. Of those banks, only Deutsche Bank has reached a settlement so far. The German financial firm also agreed to help the plaintiffs pursue similar claims against other banks as part of the settlements, according to the letters. Vincent Briganti and Robert Eisler, attorneys for traders in the silver fixing lawsuit, said Deutsche Bank will turn over instant messages and other communications to help further their case. Financial terms of the settlements were not disclosed. So there we have it. Is Deutsche Bank just an ordinary institution that has its fair share of bad apples? Or is it, as the headline asks, rotten to the core? We'd appreciate your views. We hope you have found this video interesting and informative, and if so, please give it a thumb up and share it on Twitter. Also kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe as a free member for regular email updates and offers. Our Facebook page, which is updated daily, can be found at facebook.com/illuminatisilver. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.